Hello, future accountants. This is Teacher Manette with another accounting lesson. Today I'm focusing on adjustments, year-end adjustments, specifically income received in advance. So, income received in advance. If this is my financial year, then it happens that I receive income like rent income, for more than this financial year, for this financial year and a little bit of next financial year. So this is income received for the next financial year. Now, income received in advance, the rule states that only income receivable for the current financial year must be reflected in the financial statements. Amounts received for next financial year should be reflected in this year's financial statements. So that means only this 12 months of the current financial year is allowed to be recorded as an income. So the amount received for next financial year is posted to the income received in advance account and is classified as a liability for the business. Because at financial year end, that money is owed because we are not yet supposed to receive it. So income received in advance is a liability to the business. The GAAP principle that we follow is the matching or accrual principle. So our GAAP principle is the matching principle. They like to ask you in the exams what GAAP principle is affected, and it's the matching principle. So the matching principle states expenses and income should be recorded in the correct financial period in which they occur. This will include expenses or income that has not been received. This means income and expenses recorded when they are incurred are not when they are received or paid. So when they are occurred, when the income and expense occurred in this financial year, it's when it should be recorded, not when it's received or paid. So to give you a summary of this, or easier way to remember it, I always say the rule states we want 12 months of income minus 12 months of expenses to get 12 months of principal. Do you see the matching there? If we have 13 months of income minus 12 months of expenses, we cannot calculate 12 months of profit. So that's why we use the matching principle. I'm going to use different examples, and you'll see some of these type of transactions in your test. So I'm going to range from very easy up to difficult. And then if you finish following all 4 examples, luckily you should be able to then be able to answer any type of these questions in your tests. So here, this extract from the pre-adjustment trial balance tells me that rent income has a balance of 23,400. That means this is how much I have received in the financial period. The adjustment then says that rent for March has already been received. If I look at my timeline, it means I've received for this year plus that 1 month extra. I've received rent for 13 months. I'm only supposed to have 12 months of rent in my financial statements. So therefore, I will take my 23,400 divide by 13 months. And I'm receiving rent of 1,800 per month. And we've received 1 month in advance. So how do we record this? In your general ledger, rent income is an income. Income received in advance is an liability. I'm going to put in my total first. So total, the date is the end of the year because it's a year-end adjustment. So February 28, total brought forward 23,400. This is 13 months of rent. It's only allowed to be 12 months. So therefore, I am going to take out 1 month to make that 12 months. Now, February 28th, and we will take this to income received in advance in your general journal 1,800. Then I said every debit has a credit. So on the credit side, I create the liability February 28th, rent income, general journal 1,800. And then how do we close off a nominal account? You will also learn that in your closing transfers, your final accounts chapter, which I will make a video of later. We close all nominal accounts off to profit and loss at the end of the year, not with a balance. Balance sheet accounts close off with a balance at the end of the year. Nominal accounts close off to profit and loss. So we'll add up and I'll say, but the debit side is not equal to that. So I take this minus 1,800 and my profit and loss is 21,600. And this reflects 12 months of rent income. In your general journal, you'll have your journal voucher number. The day is the end of the year. This is a year-end transaction. Now you debit rent income with 1,800. You credit income received in advance, 1,800. Then your narration, if required, your story that tells us what happened, rent received in advance for 1 month. The narration does not have to be word for word the same. It has to explain what happened. If you know the number of months or detail, you have to provide that. So this was your first example, very easy example. Let's go one harder. Example number 2. We have an extract from the pre-adjustment trial balance. My year ends 28 February 2024. Then it states that rent income, we've received a 16,250. Now it says part of a building has been let to Marie since May 2024 at 1,250 per month. Now, accountants, if you see dates, use a timeline. So my year ends 28 February, so the year ends 28 February, therefore it starts 1 March. Some students ask me, but how do I know that the dates confuse me? It ends 28 February. Then ask yourself, what day is after 28 February? It is 1 March. So the year has to start 1 March. So if I see dates, draw a timeline. Then you put in your detail. On 1, we started renting this building since May, so 1 May. And we've rented it till the end of the year, so we've rented it only for 10 months. The rent per month is 1,250 per month. So I'm going to say 1,250 times 10 months gives me 12,500. So the rent for this financial year should only be 12,500. We have 16,250. We have too much. You see, we're supposed to have 12,500. We've received 16,250. This means we have received in advance. So then I'm going to take that 16,250 minus the 12,500. And I see that the difference is 3,750. This means that 3,750 was received in advance. So again, in my general ledger, I'm first going to pop in, say rent income's an income. Income always credit, which means it has a total on the credit side. Income received in advance is a liability. So rent income, there's my total of 16,250, which I got from the pre-adjustment trial balance. Now, once again, we have 3,750. That's too much, remember? So it's not allowed to be in there. We need to take it out. So take February 28, income received in advance, general journal, 3,750. So I take out what was paid in advance. And then it's simple as saying every debit has a credit. So in my credit side of income received in advance, February 28 rent income, general journal 3,750. Thereafter, we close off our nominal account to profit and loss by writing the biggest total. Then I say, the debit side is not equal to that. So I take my total minus 3,750 and I close off to profit and loss. And the 12,500 is the rent I should have for this financial year only. In my general journal, journal voucher number, the end of the month, debit rent income with 3,750, credit income received in advance, 3,750, and your narration, your story that tells us what happened, rent received in advance. All right, example number 3 gets more difficult, but luckily you will be able to do it. It's very easy if you follow your rules, you follow your timeline. So the extract from the pre-adjustment trial balance on 28 February 2024 state that we have a balance of 37,100. So this is the rent that I have received for this financial year. Well, the rent that I've received during this year. But how much should it be? It says the rent increased by 400 per month from 1 November 2023. The rent for March 2024 was received and deposited. Immediately the students think, oh no, but wait, if there's dates, you do a timeline. So first I pop up my timeline. My financial year ends 28 February, therefore it starts 1 March. On 1 November, the rent increased. On 1 November, rent increased with 400. We have received March rent, so we've received that 1 month in advance. So then I say from the 1st of March to before the increase, until the increase, there was 8 months. And rent is X. We do not know what rent is. Rent was X. But then, and how do I know it's 8 months? It's March, April, May, June, July, August, September, October. I do not include November as it is the 1st of November. Now, from 1 November until March, we had November, December, January, February, and March, 5 months. And for that 5 months, rent was X plus 400. Don't be worried when you see X's. I'm also not a math fan, but this is the math I can do. The only maths you'll be able to have to really do for accounting is these X sums. So it's as simple as saying for 8 months, rent was X. So for 8 months, rent is X. For 5 months, rent is X plus 400, and the total is 37,100. Then I say 8x plus 5 times x is 5x. 5 times 400 is 2,000 equals 37,100. 8x plus 5x equals 13x plus the 2,000 equals 37,100. Then I take that 2,000 to the other side by minusing it. So 13x equals 35,100. Then I divide the 35,500 with 13 months to give me x. X is 2,700. Now remember, this is x. This is before the increase. We need to know what it is after the increase. So 2,700 plus 400 is 3,100. And this is the amount after the increase. And how many months were extra? Only the 1 month. So 3,100 was received in advance. All right. In our general ledger, rent income is an income. Income received in advance is a liability. Let's pop in that total. February 28 total brought forward 37,100. Now we know that 3,100 was received in advance. So in there's 3,100, that's for next financial year. So therefore, I'm going to take it out. Put it on the other side. February 28, income received in advance, general journal 3,100. Then I say every debit has a credit. On the credit side of income received in advance, February 28, rent income, general journal 3,100. And then we close off my nominal account to profit and loss. Add the biggest in the total and say 37,100 minus 3,100 gives me profit and loss, general journal, 34,000 was the rent for this financial year only. Remember, keep in mind that rent income account can be replaced with any income account. Can be donations income, discount, any type of income that you can think of, commission income. It's not always going to be rent income. It could be any income account. My general journal, my journal voucher, my day, I debit rent income with 3,100, credit income received in advance with 3,100, and my story, rent received in advance for 1 month. Now, our last example is the most difficult. These examples, you can get any of them, any of these type of transactions or adjustments up to the end of grade 12. So this is applicable for grade 10 to grade 12. So the last one, it says, my pre-adjustment trial balance states there's rent income of 82,360. Then it says the rent income has increased by 10% on 1 March 2024. The tenant has paid the rent for March and April. So don't panic. We have dates. Our first step is to do a timeline. 1 March to 28 February. Then it states that on 1 March, so that's going to be right here at the end of the financial year, it increased with 10%. My rent increased with 10%. We've received rent for March and April, so we've received for 2 months in advance. So for the first 12 months, before the increase, the rent was 12 as X. So for 12 months, the rent is X. For those 2 months, it's after the increase. So year rent is 100%, right? After the increase, it is now 110%. For 2 months, it's 110%. So we do another simple X sum again. For 12 months, rent was X. Plus, for 2 months, it's 1,1x. How do I get 1,1x? If you type in your calculator, let me write it here quickly. If I type in my calculator, 110 divide by 100, which is 110%, I get 1,1. That's how I get to that 1,1. Take 110, divide by 100, which is 110%, and I get 1,1. So for the 2 months, the rent is 1,1x. And that equals to 82,360. So then 12x plus 2 times 1.1 is 2.2x equals 82,360. So 14.2x equals 82,360. Let's get x alone by dividing 82,360 with 14.2. So x is 5,800. Now keep in mind that 5,800 is right there. It's before the increase. We want after the increase. So therefore, I'm going to say 5,800 times 110% to include that 10% increase. And the rent is 6,380 per month. But how many months were too much? We have 2 months. So I'm going to say 6,380 times 2 months equals 12,760. So therefore, 12,760 was received in advance. So in my general ledger, rent income is an income. Income received in advance, a liability. Let's put that total in. Rent income, income. Income always credit. The total goes on the credit side. Then we know in that total there's too much. I have to take it out. So on the debit side of rent income, February 28th, income received in advance, general journal 12,760. Every debit has a credit. So in your credit side of income received in advance, February 28th, rent income, general journal 12,760. And then again, we close off our nominal account to profit and loss. There's our totals. Take that total minus the 12,760. My profit and loss is 69,600. This amount will be recorded as an income in your financial statements. The general journal, journal voucher number, day 28. I debit rent income with 12,760. I credit income received in advance with 12,760. My narration is a story. It tells me what happened. Rent received in advance for 2 months. I really hope that you learned something and that you enjoyed. If you did, please leave a comment, like and subscribe my channel. I will be making more videos on all these adjustments and the different types of adjustments that you can find with each of these year-end transactions.